It's about that time of day again. My name is Joseph. Tuesday evening, August 21st. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with channel pattern tonight, and that tells me to look for selling opportunities using a bull trap up above channel highs, and I've got my eyes on the battle zone tomorrow morning. The S&P is bearish with a strong move lower this evening, but I don't want to chase this move lower, so I'm looking for more reliable selling opportunities using the high of a hidden channel tomorrow morning. And don't forget the Nasdaq. The Nasdaq also bearish with a strong spike lower, so I'm looking for selling opportunities, and I'm really waiting right now on the Nasdaq to see if we get a spike in channel, a spike in range, or maybe a flag pattern, and we'll know more in just a few hours on the NQ. Over to gold, the yellow metal is bullish with a trading range this evening, and with price testing that pendulum swing resistance at the high of the range tonight, I'm looking for an opportunity to sell this market back down to those range lows, and I'm waiting for that two-try rule to trigger the entry tomorrow morning. And don't forget about the euro. Wrapping up tonight on the euro. The euro is bullish with a strong spike higher, so I have my eyes on buying opportunities using a combination of a trap low and a key support trend line coming up tomorrow morning. Well, we're back in the action after a wild, low-volume summertime trading session today, and with some big moves on the chart to finish today's session, we're looking forward to some big opportunities in tomorrow's trading session. As always, I got a great video newsletter in store for you guys and gals tonight. Plenty of big opportunities setting up for Wednesday's session. Before we jump in, though, and put the plan together for Wednesday, I want to remind you, if you watch me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the video tonight. Also, if you have any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, make sure you hit the bell icon so you get notified every time I post another video. Oh, and don't forget, if you really want to stay in tune with everything going on here at School of Trade, head over here to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. In the upper left-hand corner, all I need is your name and your email address, and I'll shoot you an email every time I publish something new. If you're on social media, you can follow me in the lower left-hand corner. I'm always posting exclusive content that you won't find anywhere else on any other pages here on our blog. Follow me on social, lower left-hand corner. And how about all the charts from tonight's video? How easy is this? All the charts from tonight's video, you can have them ready on your computer right tomorrow morning. Grab those charts by following that link that says click here to download today's charts, and grab those charts and be ready for tomorrow. And then speaking of tomorrow, upper right-hand corner, if you're not a member here at School of Trade, I've got a free pass for you. Come out and join me as a guest in our trade room. If you're not a member, grab that free pass in the upper right-hand corner and come see what we're all about. Don't forget, you can always call me in the office, right? Drop me an email or a comment below the video, or I'm always available on live support. Use that live support tool on the right-hand side of the website. I look forward to answering all your questions. All right, let's dig in here tonight. We got a lot to cover here. We got some news on the schedule for tomorrow, and then, of course, big moves to finish off today's session. So I want to make sure you guys are locked and loaded with the plan for tomorrow. Now, tomorrow is a Wednesday, August 22nd, and of course, the first thing I always think about when it comes to a Wednesday is the weekly inventory report. So if you're a crude oil trader, don't forget the best trades tomorrow will always come before 10 a.m. Eastern time. Yeah, I know you'll get some action after that report comes out, but I'm talking about the most reliable bread and butter patterns. They're going to come before 10 a.m. Eastern time on Wednesday morning. So my plan for Wednesdays is always pretty simple. get to it early. If you don't get much right after 10 o'clock, price action oftentimes slows down for about 20 minutes before that news comes out, right? Just be aware after that news comes out, it can be really, really chaotic and really unreliable. The key word for professional trading is reliability, right? Probabilities and reliability, right? The problem is as we get closer to that news tomorrow, the probabilities are going to decrease, the reliability decreases, and so I always like to tell my clients, myself included, get to it early on Wednesdays if you're trading crude oil, right? There'll be plenty of other opportunities across other markets, but be careful after 10 a.m. on Wednesday morning. In addition to that, we also have some big news tomorrow. We got the existing home sales number at 10 o'clock. I always love it when we get a nice, big, juicy news report right at 10 o'clock. We don't call this the 10 o'clock shock for no reason, right? There's a reason why we have that nickname. 10 o'clock is oftentimes a very big turning point. We lead to full-blown reversals a lot of times at 10 o'clock, or we lead to continuations of that trend. So if I had to guess right now, outside of oil, right, I would guess tomorrow between that time of 9:30 and 10:30, that's when you're probably going to see some big opportunities right across markets. Again, outside of oil, because oil has the inventory report at 10:30 Eastern time. And then don't forget, tomorrow we got the FOMC meeting minutes, right, by around 2:15, 2:20 tomorrow afternoon. We should be able to ride a little bit of that momentum right into some reliable trading opportunities. Remember, though, the most important thing about an afternoon news event is we will get a full morning session, but be careful with that time between 12:30 and when the news comes out, because we oftentimes are really quiet and really slow. So really keep your finger on the pulse, right, as we go out of lunch. You know, lunch is usually until about 12:30, 1 o'clock, and you can usually find some opportunities in the afternoon between that 1 o'clock and 3 o'clock block. But when there's a 2 o'clock news report, though, oftentimes traders will kind of hang out until they get that news. So I would say tomorrow, 2:15, 2:20, right, we should have an idea of how that market's reacting, and hopefully we get enough volume right into the close tomorrow, and we can ride that wave right for a few more opportunities late in the day tomorrow. So we got quite a bit going on tomorrow. Again, weekly inventory report for all you crude oil traders. Get to those trades early. 10 o'clock shock is definitely going to be in play tomorrow. And if you're sticking around tomorrow afternoon, right, I know it's summertime trading, and we don't oftentimes see very good price action in the afternoon during summer times, right, unless there's a news event, right? And tomorrow's FOMC meeting minutes is surely going to give us, right, something to work with right tomorrow afternoon, again, 2:15, 2:20. And then don't forget, we've got a bunch of news now, right, into the end of the week. So tomorrow night we'll talk more about, we've got some home sales numbers, we've got some inflation numbers coming on Thursday, and of course on Thursday we're going to transition into this kind of last summertime weekend, head of that Jackson Hole Symposium, right, where Friday we got Jerome Powell speaking. Sure to be a good end of the week, so come in and tune back in tomorrow night, right, and we'll put the plan together for that news tomorrow. But again, home sales number tomorrow is that big news report outside, right, of all you oil traders, right, sitting on hands around that oil report tomorrow morning. Let's get jumping into it here tonight. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bearish with a strong spike higher, 2 tries for the bulls, and a bear channel this evening. The strong spike higher, coming after the tariff talks between the U.S. and Russia this morning, looked like the buyers would never stop buying. But after the dust settled, the bulls tried twice to buy the pullback, and it's easy to see the bulls left the market once it failed to retest those highs. This most recent big green candle is simply the API report to finish off today's session. The bear channel, in my opinion, is just a little bit too pronounced to be calling this a bull market right now. And that tells me with that bear channel, I want to try to ride this momentum back down to that 65.31 right low by selling up above those highs, and I've got my eyes on that battle zone. Now, as you can look at the chart tonight, it looks like crude could be a little bit confused. It starts off right again in the wake of the tariff talks in the U.S. and Russia, and of course, we're seeing a lot of renegotiation right now between a lot of the OPEC and non-OPEC countries. In fact, I saw a headline today that said that for the first time ever, the state of Texas here in the U.S. had exported more oil than imported. And the key was none of those exports were going, guess where? None of them were going to China. So there's a lot going on right now. Whether that's a good thing or a bad thing, there's a lot of these changes that are happening right now, and that big jump higher, right, was clearly buyers placing their bets, right? The price of oil would be choked off, right, because of limited supply, right, because of tariffs and sanctions. But as you can see, though, with such a strong move higher here, right, the buyers had beautiful chances here to buy once, to buy twice, and you can see what happened after those buyers gave up, right? The market kind of fell flat as the price, dropped lower. So that two-try rule, right? One try, two try, the buyer's trying once, the buyer's trying twice. That's what makes me weary of being a buyer right now. This just looks way too pronounced here to the downside to call this a bull market. Make no mistake about it, though. Anytime we see a strong move in one direction, we know the odds are pretty good with a two-legged pullback that we're going to get a retest of that high. So the fact these buyers could not muster up the energy to get back up to retest the high is really the big reason why I'm looking to trade this thing short. So we have this bear channel coming down, right? What does a bear channel tell me to do? It tells me to sell the top of that channel. It tells me to look left at areas of resistance, prior swings, and sell above the top of that channel. And of course, with the market pushing higher on news headlines, we have to assume the target is back where the party began here yesterday. So I want to be a seller. I'm open-minded to be a buyer right now, but I just simply don't have enough evidence that these buyers really have that momentum on their side right now. It'll take a little bit more here for the bulls to convince me, to get back in and be a buyer again. So right now, the big clue right now is we're at the top of that channel, and we're above the moving average. Anytime I see us in the market's bearish and we're above the moving average, I know that you're probably going to have buyers now trying to buy a pullback to that moving average, right? Now, this is where we can look for selling opportunities, because as those buyers try to buy that pullback, I can now sneak in and start planning an entry if they fail. If they fail, where would those buyers start getting out for a loss? If I was a buyer, I'd be getting out just below that low. And that is exactly where I'm looking for my first selling opportunity tomorrow. I want to see these buyers try to buy the next pullback. Once I see them try to buy that next pullback, then I know where their stops are, and that's precisely where I'm looking for that sell going back down, to retest those lows. Now, as the market goes lower, as professional traders, we never want to chase. We never want to sell low, and that's exactly what you'll be doing if you chase that move lower like this. So rather than trying to chase that move lower, why don't we find some more resistance here? Let's draw a trend line off that low to low. Let's bring it up to that high, and let's look for another sell off of that key level of resistance. So now we've got two great opportunities to capitalize on those buyers failing, one of which is a buyer failure pattern, the other, of course, being a bear pullback pattern. Now, how do we get, what happens if price goes higher, As we push, we push up, we're looking for a failure, a strength move down into a new channel, and we'll drop it back in. What if the market moves higher here, What if it moves higher here? Do we give up on that plan? No, not so fast, because now we're running right into some key resistance levels overhead. This is where sellers get a chance to sell high. Most importantly, what don't we expect up there? We don't expect buyers to want to buy high. So if the market goes higher, I would expect that bulls are going to be weary of buying into that high. That's going to give us a nice opportunity now for a combination pattern, which would be a trap pattern into a buyer failure. Then, of course, right, into that strong move down, find that new channel, right, and sell off that channel. So if we can get going higher here, now all of a sudden we have potential here for a trap pattern, basically playing right into, right, the buyer's lack of interest up there, right? It's almost like a freebie opportunity here because buyers are not going to be interested. A trap pattern into a buyer failure pattern, right? To try failure into a bear pullback pattern, right? So that's if the price goes higher here. Now, real quickly here, guys, traps, buyer failures, pullback patterns, right? I want to slow this down for a second here because if you're here for the first time right now, this could be a completely different set of terminology and you may have no idea what I'm talking about. So to make it easier for you to kind of catch up with all the terminology and to really learn more about all of these entry patterns, I've got hundreds of hours of recordings, right, of these entry patterns, and you can find them as part of my free trading course. If you'd like to get a deeper dive into this trading strategy, learn more about everything we're going to talk about here today on the newsletter, and really get the most of our time together every evening on the newsletter, grab that free course. It's in the upper right-hand corner, linked up, right? I'll also put the link in the description of this YouTube video as well, right? Not to worry, pause the video. I'll be here when you come back, right? And I'll be ready, right, to come back we'll go back to teaching, right, once you get back. So sign up for that free course, get that deeper dive. That way you know exactly what I'm talking about when I talk about that trap into two-try failure, into strength, into pullback for a retest of that low. Now, what would it look like? What would it look like if the market turned bullish? How would the market turn bullish? It would require us to show proof that momentum is now returning back to the bulls. And to do that, we need to have what I call the 1, 2, 3 reversal. Now, it starts off with a real strong move against the trend. We already have that strong move beginning to see, right, to take form right now. The second thing will be a pullback to the moving average. And the third would be a strong break higher, right? A strong break higher. Now, remember, though, right, it's very tempting to want to try to buy that pullback right there. But remember, that pullback is not a high reliability trade because it's more likely to fail, and we can sell right back into that failure. But if the buyers can hold that pullback, if we can get a strong push higher here, the key is strength, right? That's the key. I call it a 1, 2, 3 reversal for a reason, right? Reversal has that emphasis, right, on the ursal, right? Because I want to make sure you remember it's got to be on strength, right? It's got to be on strength. Now, once we see that 1, 2, 3 reversal, right, with an exclamation at the end, then what do we do then? Do we chase after it? We buy high? No, right? We buy low. How do we buy low? We find levels of support. I'm going to take these two trend lines here. I'm going to take the two highs, right? We'll copy and paste that trend line. We'll bring it on down, right? And we're going to grab that pullback and look to be a buyer, right, off the low of that channel. Where's my target going to be? Yeah, good question, right? Target for the bulls, up at that measured move. Target for the bears, back down to that 65.31. Now, don't forget, time is of the essence for tomorrow morning, right? 10 o'clock Eastern time, we got to back off, right? Because we're not going to be getting the typical, right, reliable price action that we normally get, right, on the crude oil. How about some S&P right now? We got a bunch of movement today, late in the morning here, specifically on the E-minis. We'll go S&P, and then we'll go Nasdaq here in just a few moments. The S&P is bearish, obviously here bearish, with a strong spike lower, a measured move, a hidden channel, and a reversal line on the chart this evening. First of all, this strong spike lower, we talked about this earlier on crude oil. This strong spike lower is really the big clue. That tells me the odds of a two-legged pullback right, and a retest of the low are very, very high, right? If you recall, on oil, oil was a big, strong move up. But again, anytime we see a strong move in one direction, two-legged pullback, right, retest the high. Strong move down, two-legged correction, retest that low. That's what that strong spike down. It also tells me to keep an eye out for a spike in channel, a spike in wedge, a spike in range, a flag pattern, right? Anytime we see a strong spike, I'm always thinking one of these four scenarios, right? It's either a spike and channel, hold on here, spike and channel, spike and wedge, which looks like a spike and channel, but it's a wedge, right? A trading range, spike and range, or the notorious, right, flag pattern. Right? These are the four scenarios we're looking for right now. Now, all four of these scenarios all tell us to look for sell high, right? Sell high, sell high, sell high, and sell high. All four of these scenarios tell us the market's bearish, sell high, sell up at resistance, sell above that pattern, right, and get it to drop right back down again. So when I go back to my chart now and I look at this, right, I look at this strong spike down, I'm immediately now thinking, right, spike and channel, up and back lower, right, spike and range, right, spike and range, failure back down, right, spike and wedge, right, spike and wedge, up and back down, or the elusive, right, always lovely, right, that spike and flag, right, selling back down again, right? Now, don't forget, right, I've got hundreds and hundreds of these examples on real charts of all of those patterns in my free trading course. The links are in the description, right, or in the upper right-hand corner, so grab those, right, while they're available. So that's this big spike, right? One of four scenarios to trade with. And the big clue, I think, is this hidden channel. If I draw this trend line down off these lows, it just fits like a glove, right, off of those highs, right? It's probably because people probably use that trend line, combine that with it to find that target. So the bottom line, though, is that the high of that channel combined with, right, a key reversal line at 62, this would be a wonderful area up here that we can look to sell. So we get a lot of clues in the chart tonight. All of them point to price being bearish, right? And really it all boils down to what we get over the next few hours. Now, a lot of times we see this much strength going lower, we're going to start going sideways, right? So the most common scenario here is going to be into a range, right? A couple hours from now, as we break into the Asian session, right? We're seeing the market go sideways here. Double tops, double bottoms. If that situation we get, I'm looking for what we call a two-try failure. I want to see us go up. That's one try. Pull back, go up. That's two tries, and we're looking to sell into that second try, right? That second try, it's called a two-try range breakout failure, right? In liquid markets, right? Not illiquid cryptos and penny stocks and all the junk you see on television these days, but in real liquid markets, right? Where there's lots of volume like the S&P 500, most breakouts are going to fail. Don't try to mess with that first breakout because that first breakout will try to run you out on that second one. Look for the second one. Once you see it start to fade, now you know, right? Sell it, and we're going back down, right, to retest that low. If the market keeps going lower, right, if we keep seeing lower lows here, right, let's just say we keep grinding lower here, look for a channel, right? Look for that channel, right? And that channel, again, I want to go up, right? And then once we go up, we look for those buyer failures. You know the drill, same thing we talked about on oil, right? Buyer failure into seller strength, into that new bear channel, right? And we're looking for that sell coming back down again, right? We're selling up around that high. So again, I'm looking to use the top of this channel here as a key level of resistance, depending on what variation, right, of that pattern that we get. I'd love to go up. I love to see these buyers try to buy that pullback. That tells me exactly where their stops are. We can sell into those stops. Don't chase after that run lower. Find that new channel, right? And we'll sell, sell, sell on the way down. That also goes if the price keeps going lower. Again, I do want to remind you, if we just keep rolling lower here, right, draw that channel out, up, right, and sell back down. If it keeps going lower, that doesn't give you the green light to sell low. If you're a professional trader, you know the value of selling high, right? Over the long run, you'll make more money that way. Now, how do we reverse? What would a reversal look like? Well, we see the amount of strength going lower, right? We're going to need to see something similar going higher. We're going to have to see a strong move up. How strong? Strong enough to get clear above that moving average, and then we're going to have to get this price to pull back and then another leg higher here. I don't think you're going to have a lot of sellers, right, who are going to be diluted by this until we get that strong push higher. So you really got to get that strong push higher if we're going to get the bulls back in control. If they can't get that strong push higher, it'll just collapse back down, right? And again, there's our two-try failure pattern, which again, you can see lots of examples of in that free trading course, both in the description and linked up in the upper right-hand corner. If we do see that strength, pull back strength, same plan as always, find that new channel off those highs, look to buy that low, right? And we're looking to buy off that low back up to retest the high. At this point, right, seeing what we've seen so far today, at this point, it looks like it's a complete miracle if these buyers can take this thing back. But who knows, right? Who knows? It's August. It's the end of the summertime season. Low volume environments right now. I'd be lying to you if I said that couldn't happen, right? If you have any experience at all this time of the year, you know we can get some pretty big moves on relatively low volume. Let's keep going. The Nasdaq is very similar to the S&P. We're bearish, strong spike lower, a measured move, reversal line, and a hidden channel on the chart this evening. The strong spike lower tells the big story. Right, that strong spike lower, what does it tell me, right? It tells me strong spike lower, we're probably going to see a two-legged pullback and a retest of that low. Anytime we see a strong move in one direction, two-legged pullback, retest of that extreme, strong move down, two-legged pullback, retest of that low. So I'm looking for the opportunity to sell that two-legged pullback, right? I'm expecting it. I don't know exactly where it will be yet, but I'm waiting patiently for it, right as we speak. It also tells me spike and range, right? One try, two try, sell back down, right? Spike and channel. If it keeps going lower, right? Up and back down, right? Selling. And again, the sell you're looking for, right, is if we keep going lower here, it's that strong move up, right? That buyer failure. This is obviously not to scale. Please do not think this is drawn to scale. I'm just illustrating for you the pattern you're looking for on this, right? It's a buyer failure, right? Failure into strength, strength, of course, don't chase after it, into pullback. That same pattern we talked about at the beginning of the video newsletter tonight, that's what we're looking for once we, right, pull back off of that low. And again, I'm just drawing it up here right now, illustrating it. If you want to see literally hundreds of examples of these patterns, it's linked up in the description, right, as well as in the upper right-hand corner, right, the little information icon in the upper right-hand corner, right? So again, if we go lower, you're waiting for it up so we can sell high, right? If it starts to go into a bull channel here, right, if we get that flag, remember the goal is, right, is sell off the high of that flag, and the best way to do that is going to be with an overshoot. So if we see it go, right, starts flagging out here, right, then it's overshoot, failure, breakout, pullback, back down, right? It's a failure above the top, right? It's a breakout, pullback, right? Break down, use the underbelly, right? That's your breakout, pullback. That's your secondary follow-up pattern, right, when it comes to a flag. Flags can be tricky because you've either got to get up above it and sell back down, or you've got to get through it and then use the underbelly, right? Use the underbelly of it as resistance, right? Those are the two areas you're looking for, right, for that flag. It always takes a little bit of guts to take that first one because it feels like the market's bullish, but we know what we're looking for a bull market, right? How does the market turn bullish? Strength, pullback, strength. Trust me, reversals are never going to catch you off guard, right? I mean, once you see this thing falling out of the sky here right now, right, you know these buyers have walked away. If the bears walk away, what's going to happen is it's going to give those buyers a chance to bam, right? That big strong move higher here. You're not going to get fooled by a reversal. It's easy though to get fooled when you think a reversal has happened and it really hasn't yet. See, the reality is you just don't know how explosive reversals are. Reversals are very explosive because you're getting the opposite side of the market is giving up on it. Right? That's what leads to this big collapse here is the buyers who are already in this market, they're getting fat and happy, this nice bull trend going higher. Well, all of a sudden now, right, the buyers try once, the buyers try twice, and look, right, those buyers were not sticking around very long to see how the party ended, right? They got the heck out of there, right, once the keg was floating in the pool. So we know what happens when a market reverses. It's just the opposite side giving up on it, right? You're not going to be fooled. Well, again, a reversal will tell you, right? A non-reversal, though, will not look like a reversal. That's what you'll get fooled by, right? So remember, sell high, right? Sell high right now up around the high of that channel, right? Looking to go back around the high. So you're looking to sell high. Again, failure, strength, pull back off that new channel, right? And back down we go. Target for the bears, 51 3/4, right? Target for the bulls, back at that 52 1/4 there for tomorrow. Let's keep going here. Let's keep going. How about some gold? Gold is bullish with a wide trading range, a strong bull run, a pendulum swing, right, and a measured move on the chart this evening. Now, the trading range is wide, and it's a bull bias to it. Okay, the width of the range is really important because it tells me there's enough room for both the buyers and sellers to make money as price rotates back and forth. It also tells me the larger the range, right, the larger the momentum builds, and I need to be careful trying to sell right now because the momentum is going to be really strong. Okay, that's a big, big clue, and we'll dig into that more in a second. The strong bull run to finish today's session, that's probably the big clue, the biggest clue right now. That tells me that I cannot try to sell this market right now because momentum is way too strong. I need to wait for that momentum to shift back to the hands of the sellers, right? And then I can look for the sell going back down here. So again, a couple big clues here. I think the big clue right now is the size of this range. We saw this strong move up. We pulled back, and we retested the high. And you can see that if I take the range and I take that amount below the range and bring it up, you'll notice it's just too convenient. It's too perfect not to be respected. Let's put it that way, right? If that's a coincidence, that's a really big coincidence because the amount of the move below the range is often the amount of move above the range. You can see, right, smack bullseye right on that 04.3. So we know strong move up, right? Usually two-legged pullback and a retest of that high. They're retesting that high. And what are we seeing? Are we seeing buyers buying it or are we seeing buyers sell it up here? What do you think? Big wick at the end of the day, right? Top of that move. Yeah, those buyers are taking profit. Whenever we have, right, a nice strong move higher, we expect to see that two-legged pullback and a retest of the high. When we get back to that high, if I see this big wick, right, big wick at those highs right now, what does that tell me? It tells me that buyers are taking profit. In other words, it tells me that buyers are rejecting the idea of higher prices. In other words, the buyers got what they came for. And when I see that rejection at those highs, I then look at the deepest part of that pullback and I draw that in as the range. Then the real goal is to wait for the market to come back to that low, one try, two try, and I can buy off of that low, right? That's the strategy here, right? That's the strategy for this particular situation. It's a bull market that double tops, which double tops in a bull market create a range. When I find a range, and again, you'll learn more about ranges inside the free trading course. It's linked up in the description, right? Once we see that trading range, then we're looking to buy the low of the range, and we use that to try range breakout failure pattern. Now, there's one big problem though. There's one big small detail, and that is the size of this range, right? See, most of the time, these ranges are relatively small. You know, they're relatively small. We pull back, we double top, they're relatively small. So I can buy a failure, right, when those ranges are relatively small. The problem happens, though, when we have a big move up, a deep pullback, and a retest. Now that range is really wide. What that tells me is that if we go back down to that low, this market's going to feel bearish, right? It's going to feel very bearish when I get down there. So the wider the range, the more the momentum will swing, in this case, right on the side of those bears, which basically means I can't be as aggressive with a one try, two try failure, right? I'm going to shy away from that failure pattern because the momentum is just too strong. And a lot of times those failures, what happens is they're actually traps, right? They'll trap and they'll run one more leg lower. So to avoid that problem, what I like to do is I like to wait for the failure to actually succeed. Then, rather than chasing after it, you guessed it, find that new channel, right, and look to buy that pullback right off that channel. So that's going to be, again, like I mentioned, right, it's the big, small detail, right? It's that small detail that if you're not paying attention, it will cost you some money and losses if you're just trying to fade these breakouts right now. Now, remember, the same thing goes to the upside, right? So right now, we got that range here, back to my chart here. It's a big range, right? This momentum going higher is really strong. So instead of trying to sell a failure, what you want to look for is something similar we saw right here. See what happened? It went up, it pulled back, it went up, and look what happened. Yeah, see those buyers? The buyers came in for a trap, right? You want to take that. You want to wait for it to roll over and sell it as it's rolling over, right? That's a much more reliable trade. So that's my plan for the sell, right? My plan for the sell is we go up one try, pull back two tries, and then I'm looking for that, right? Looking for that, not the failure, but the pullback, right? So in other words, one try, two try, skip the failure, momentum's too strong. Wait for that strength move down, then draw out that channel here, right? And again, I'm trying to sell as close to that high as I can. Find that new channel, sell off that channel high, right? And again, getting that momentum now on our side, right? That'll be a much more reliable trade here on the gold. And then again, if we collapse back down again, right? We collapse back down to that low, one try, two try. Again, because it's going to be such a strong momentum shift, I'm going to look for that, not that spike, right? But wait for it, right? And then buy that pullback, right? Going back up, right? To retest that high. Buying low, selling high, but again, because of that width of that range, that momentum is going to be quite strong. Now, how do we break out of a range? Well, we talked about the 1, 2, 3 reversal, right? Same thing, 1, 2, 3 breakout, right? For example, strong move up, that's 1. Pull back to the moving average, that's 2. Strong move through, that's 3. Right? 1, 2, 3 reversal. 1, 2, 3 breakout, right? I need that next leg higher, right, to be a blow off, right? It needs to be really strong. Nobody's taking profit. Everybody's buying it, right? It's not a reliable breakout pattern to buy it. Then we'll find that new channel, right? Again, I'm always trying to buy at support, right? And we'll look for that new bull channel. And again, we'll try to use whatever support levels we have at that time, right, to be a buyer from there. So wide trading range combined with that strong momentum, right, as we go back and forth, that's the big clue. It's the big little clue that we're seeing on the chart here on the gold. And of course, as always, right, wrapping up tonight on the euro. This is an interesting chart on this euro. The euro is bullish with a trading range, a strong spike higher, a support trend line, and a gap on the chart this evening. Now, the trading range is an important clue because you can see how the day spent most of its time today trading sideways between that 15,600 and that 15,300 area. And even after this strong move higher, which again, right, happened on low volume late in the afternoon today. It was a low volume move here, right? Even that strong move higher still didn't get through the second range expansion, right? Which of course we teach you guys in that free trading course, right? Again, linked up in the description. So the strong move higher is a big clue, right? That tells me that buyers are likely going to try and get one more leg higher before allowing this market to collapse back down into that range. And you can see the little gap down there, right, at 15,025. The support trend line drawn up, right, is also a big, right, a big deal here. Combine that with the previous swing low. Those are key support levels that we can use to anticipate that next leg higher. So, yes, we have a trading range, and eventually we should see price back down into that range, filling that gap at 15,025 tomorrow. But the sheer strength of this move higher today is just simply too much to ignore, and that tells me to look for one more leg higher. And to get into that trade, I have my eyes on that support trend line and that swing low for the battle zone tomorrow morning. As you can see here, we started off the session with a strong move up, right, into a trading range. And as we mentioned earlier, anytime we see a strong move to range, right, one try, two try, failure, pull back and go, right? As you can see, I'm not making this stuff up, guys, right? I'm not making it up. You can easily see that's exactly, right, what traders were using to buy the low of that range. This is exactly what is illustrated, right, on the gold. Well, this is when things got a little bit cuckoo, right? Big, strong move higher here. That strong move higher is one of those moves where you kind of pulls you back a little bit. You go, whoa, that's a really big move. But when you look at the context of the market, you take that trading range, copy and paste it once, they held it there. Copy and paste it twice, right? They held it there. It really puts us into context, right? And basically, when you take that trading range, right, project your range expansions above, project your range expansions below, as long as I'm within that second expansion, right? That second expansion. And this is where some experience comes into play. I've been watching these charts like this for a long, long time, right? But what happens is we'll see these ranges and we'll see them just break higher here. They'll struggle here a little bit and they'll end up right back into that range. Now remember, the amount of that move higher, right, can easily be the amount of the move lower. So there's potential for a big, big move back down here, right, on the euro. And if you're looking closely enough at it, this level up here today on the euro was actually a prior month low as well, up there at 16, right, 225. So this could easily be just a little kiss of that prior month low. Give it a good time of that second range expansion, and then dump it back down in. The thing is, though, is that this is way too strong, right? That move higher is so strong. Anytime we see a strong move in one direction, what do we expect? Two-legged pullback and a retest of that high, right? One leg, two-leg, retest of that high. So I'm expecting to see one more leg. I'm not looking for a miracle here. I'm just looking for a retest of that high. And anytime I want to be a buyer, I try to incorporate some level of support. I've got that rising support trend line. I've got that prior swing. This area right here becomes a great area, right, for a short-term buy. Again, my goal really is just to get back and retest that high. Then we'll look and see, do we expand out from there? Do we have a range breakout basically from there? Or do we stall and then collapse back down in, right? So how to do that? I want to go down a little bit lower. As we go lower, you know that sellers are going to try to sell that pullback. They're going to try to reverse this thing back into that range. And if they do, fine, right? If they do send it lower here, well, perfectly fine by me. We'll draw that new channel, right? We'll find that sell. And again, we get some really big potential, right, for a big move back down to the lows of the range to fill that gap at 15,025, right? And potentially really run for the entire pendulum swing here. But again, what I'm looking for, though, is I want to see if I can get a failure here, right? Get those sellers to try to take it, then I can look for that buy, right, into that pullback and then back up from there, right? It's a two-try failure, right, into a bull pullback pattern. Again, leveraging this support level, leveraging that support trend line. And again, my target is not going to be very big, right? It's only going to be to retest that high. Once we get back to retest that high, it's time out, and we got to wait and see where we go from there. If we do see it bust higher here, right, and run higher, I'm going to draw this up as a spike in channel, and we'll be looking for that buy off the low of that channel, right? But if it just runs up, retests that high and consolidates now, right, now you got to be thinking here, strength, pullback, strength, new bear channel, and we're selling the sucker right back down into that range. The only thing we're waiting on right now is a pullback to be a buyer or some strength here now, right, to be a seller on that mighty euro. Looking forward to another big day tomorrow, right, in our trade room. And don't forget, my job is to help ordinary people become extraordinary traders. To learn more and to see how that transformation happens, make sure you grab our free trial. I'll link it up in the description of this video. It's right on the homepage of our website. Call me, email, jump on Skype anytime you need more information about any of our courses here, our beginner, intermediate, advanced classes, and I'm always hanging out on live support if you have any questions, because I am passionate about helping new traders. I remember how difficult it was when I was in your shoes as well. So thank you so much for tuning in. Feel free to share this video with another trading friend of yours. Give me a comment in the comment section, a thumbs up, right, if you like the content here for today. And again, make sure you grab, right, the free trial, the free trading course, right, it's linked up in the description. And I'll see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. If not, same time, same place tomorrow night. And one more thing too, tomorrow night, the last newsletter of the week. There will be no newsletter on Thursday or Friday evening this week, right? I'm going to be out of the office on Friday, so no newsletter on Thursday or Friday this week. So tomorrow night, the last newsletter, right, of this week. I never get off early during the week, right? I don't do it to you guys very often, but this week is one of them. So please mark your calendars and be prepared for that accordingly. Not to worry though, trade room tomorrow morning, 8 o'clock Eastern time. Be there or be square. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.